welcome to the Business Day Financial Mail Investment Summit, and it's brought to you by Sandton Wealth.
Investors are facing a myriad of issues which will impact how they position their portfolios to manage risk and optimize returns.
We as South Africans also need to think differently and do things differently. Think about this word inclusivity and what does it mean for different sections of society? Just economically, forget about the rest. And what is it that we could do with the resources that we have, including the resources in this room, to just make them part of the economy?
Thanks to the Minister, thanks to what's happening in this country, we can expand our horizons way beyond South Africa. And for some time now, we, or certainly our firm, have been encouraging clients, encouraging customers to take a much more diversified approach to investment, to invest globally and to invest around the world. We don't invest in regions, we invest in companies.
From a long-term perspective, we look at emerging markets and we think, actually, this is really exciting, and actually the valuations are also absolutely exciting.
When you look at South Africa, there is a strong underpin from the corporate governance that is there, that is well recognized in the legal framework.
That we're backing to find real returns of that kind of nature anywhere else in the globe.
There's been a wholesale regulatory change where banks' capital ratios were deemed to be too low. And if that does start changing and banks start lending again, we could have a different growth trajectory in this country and other countries.
We've seen a fundamental impact with the way we can implement technology, educate people about financial products, and onboard millennials, centennials, Afrilenials, unbanked, underbanked.
There's so many programs being written, and I think it's important to focus on what those programs can do.
The question is, in the future, will the largest advice business have no advisors?
The financial services sector is, you could argue, well serviced by advisors. With technology, it enables a DIY approach to investing where people want to take more control.
Property stocks in Europe are trading at a premium of 15%, while in the UK, listed properties at a 15% discount. In South Africa, the listed property sector is at a 10% premium.
In any well-constructed portfolio, all of this, whether it's on the investment side or the advice side, there will be coexistence.
There's active, there's passive, there are hedge funds, there are alternative assets, and there is a place to coexist for all. So it's not one or the other out there. Hedge funds are now a lot more accessible to the man in the street.
We need a faster growth rate in fixed investment for the economy to do better. But in order for that to happen and to have a commercial return, your requirement for investment in infrastructure, you need the economy to be doing better.
We need to talk to one another. We don't need to point fingers. We just need to find solutions at the interest of this country. There's huge opportunities.
Maybe one needs to look at those, what are those bottlenecks, practical ones, that can help to accelerate the sufficiency for us to get to where we want to.
So we have to look at how we can reduce the cost of investment management, and one of the ways is index funds. So I think it's on the debate to see how can we be more efficient, more cost effective for clients by combining some combination of active management with passive management.
In my opinion, the best approach is a pragmatic approach. The larger the assets, the more likely you should be to go passive. If you've got a very large, generalized, broad market portfolio, you can tend towards passive. If you need a more specific outcomes-based investment, I don't think passive strategies can do that right now.
You need, funny enough, an active market, a hedge fund market, and probably a number of other markets to make sure that there's that there's pricing efficiencies, that companies are motivated to generate returns in the very first instance.
There's going to have to be a consolidation of the industry so that to drive the costs down, to get the real benefit of passive, I think the costs have to be significantly lower than they are.
As the market grows, as it increases in both depth as well as breadth, we expect passive or systematic indexing strategies to take over.
What drives portfolios? Is it active managers? Is it risks? What's going on inside this thing? We've got to understand the source of returns.
We want to save capitalism in this country. We want a market economy, but it's got to work for more people. It's got to work better. And I really think the country's at a good time right now for capital, traditional establishment, call it white capital if you have to begin to understand what poor people want, so that it can, by making decisions and by understanding that it is in its interest to identify with the interests of the poor, it'll start making better decisions and it'll end up being more powerful.